Folks, Scott here, and this is the wrap for Friday, October 11th. So, wow, the Bulls remained in charge today. Not a total shocker considering what a significant move we had yesterday, because basically a lot of folks, even though I'm a contrarian, like to think, if you think, or like-minded I should say, would look to fade the strength. Thinking you've gone too far too fast, which is always possible, but really when it's such a significant shock as we've had ahead of the weekend, there was no way, folks, that we're still short. We're going to not cover, I think, going into the weekend and risking possible agreement on the debt ceiling and ending of starting the government again. So not a real shocking day, but it does set up an interesting dynamic that has not happened much at all. In fact, it's only happened 5 times in the past 10 years, and that is a 15-day high close after putting in a 20-day low in one of the past 4 days, and we did that 3 days ago. But with only 5 in the sample pool, it was just too small to really look at and to be useful. Even though it was 5 for 5, all of those gaps were winners. Doesn't mean much. So I loosened the parameters to look at what happens after a 10-day high close after putting a 10-day low in one of the prior 4 days, and let me show you the results. And there you go. Odds are almost 2-to-1 of gapping down. However, using an end-of-the-day stop shows an 82% of those have filled by the end of the day. A gap up, 9 out of 12, and has been much more profitable. And the key thing being, there was one big loser here on a gap down. If you erase this anomaly, then this too has also been profitable. So overall, I'd say a gap in either direction looks to be attractive, at least using an end-of-the-day stop. Or I should say, odds of gap fill are high in either direction, is what I would say. I certainly don't use end-of-day stops, nor do I recommend them. Now, we'll rerun these numbers and share them with our members Monday morning using our MTG stop parameters, which are basically equal to 30% of the 5-day ATR, average true range. All right. Let's see. Let's look at what the worksheet showed going into today. I really didn't think we were going to end up having a gap, but I was wrong. We sold off a little bit into the open. Oh, by the way, if you were in the trading room at the end of the day on today, Friday, I lost power and my backup failed as well. So I don't know exactly when that was, but it happened sometime after 3 p.m. because I checked on 3 p.m. Actually about 3:30 and everything was fine. So apologies for that, but that's why the room shut down, or why the chart stopped. All right, so here's what the worksheet showed going into today. And odds were not as compelling for a gap up, so I didn't try to trade anything on the overnight action. But you can see pretty much any zone to the upside was tradable for shorting up gaps. And a gap down between the close and the low was slightly attractive, just narrowly missing my criteria of 60 and 1.3. And as a reminder, this is an average of all 8 indices gap guides. So it's a good snapshot. No unique day factors. And we had yesterday's unfilled up gap and the 10-day moving average up straddle to look at. One was a big positive for down gaps, and the other was a big positive for down gaps. I'll show you my comments. Actually, I'm going to show you the gap guide super quickly because I got a question on this. Some folks didn't think the gap guides were all that compelling. They were surprised. A little surprised I took it, and I tried to always, I'm hoping to minimize or close that gap between what I'm doing and what you'd expect me to do by being a great educator. The ES was a good setup in the UCO zone today. Just narrowly missed my criteria in the YM, 69 and 1.2. That was a little bit weak in the NASDAQ, and the Russell was good. So basically 2 positives, 1 negative, and flat, so not overly compelling. Looking at the ETFs, whoops, that's the range guides. ETF Spider definitely confirmed. Remember, I'm always going to give a little bit extra weighting to the S&P. It's the primary index of all. Diamonds confirmed, neutral, and neutral. So yes, you only had technically 4 that met and 1 that didn't. So not quite as strong as I'll often take. But remember, this was a gap down. Let me show you my pre-market comments. I posted at 9:22 a.m. Eastern Time this morning. And you can see per last night's video wrap, down gaps had a special edge as well. I talked about that. So that's 3 big positives for a down gap. Now I made a note here because I didn't show the research. I really got a little bit behind, but it was important to note that small gaps downs on Fridays are I should have said can be problematic. And you can look at all the many videos. I have like 1,400 videos in our video area over here, going back for about 5 years. The bottom line is guides are neutral to slightly attractive for fading up gaps or down, and the unique and pattern data was mostly positive for fading down gaps. Right, I had 3 positives and this 1 comment there. So key concern: small gap size, closing variance, just difference between ETFs and futures, potential mixed opening directions, and small Friday gap down risk. So considering the gap size and these other little considerations in that Friday gap down risk, I was willing to trade it as long as it was at least a point of opportunity, but only with a half size position. So it had to open below 1684 and a quarter, which I knew was going to be close. And I'd use half size hold some for the extended target just inside prior highs, 1687 and a quarter. That's what I did. And I was filled long. The open was 1684. I used a time activated order from my core account with at TradeStation, and it submits the order 1 second early. I've said that many times, no secret. Everyone in our trading room knows that. At 1680, I was filled at 1683.75, so I had a tick of an extra tick of profit there by submitting it 1 second earlier. And what it does, it cuts down on, I'm using a market order as well, it cuts down on slippage a little bit, and I do get a number of positive fills like today. Now I set it up to have one half of it be sold at 85, 1 tick in front of gap fill, the other half to be at this 87 level, and it'll be the 15-minute high. Actually, I set up at 87 quarter correction, and I closed it at 87 when our 15-minute numbers came out, and actually favored the high fade. That concerned me a little bit. We were stretched up near the highs, and I had over 3 points of profit on a 1-point gap, so on a Friday to boot. So I took my profits and ran, averaged 2.25 points for a nice, sweet, easy, pain-free win. Some of our folks held on for more continuation. I didn't have any data necessarily suggesting that, but others did. Shared it with the room, and they rode it nicely up to some confluence at 1691. So it was a real good day again. I didn't do any other trades. The low fade criteria were favored today. It never got back down there, so I did have that trade set up and would have taken it. Just never made it down there. I did one trade at the end of the day. I did not call it out or come back into the room. I was too busy working on a project, but I did get long, and I nailed it. I hate saying that, but I do promise the good, the bad, the ugly, and I have plenty of ugly trades this year too. But I nailed the entry down here at 93 and a quarter, and I scaled out +4 and +6. Correction, 93 +4 and +6, and I think it only went like 1 tick below me. Let me double check. 92.75, yeah. More instinctive than anything. I thought this area may hold. We were just sort of testing it. The concept was you still have swing traders stuck short, and they did not get much of a chance to get out today, right? We were only down below the close for less than 10 minutes today. There's no weakness that I'm sure some of those folks were looking to bail. That's why we popped here and then popped really hard midday, and then I thought we might pop again. So I don't know if others took it because the room shut down. I'm guessing some others did with the same thought process, but that was a sweet way to end a very good week, and just a little food for thought for you next time. And there you go. That is the wrap for Friday, October 11th. Have a great one.